Hi, everyone. Looks like we've got some people filtering in. We're just setting up and going live on YouTube as well. I want to welcome everyone here today, and we'll get started in just a minute. So while we wait, I want to just introduce what we're going to talk about today and who's here with us. This is a webinar on blockchain for the modern private equity portfolio. It's hosted by BlockApps, an enterprise blockchain company, and Bloccelerate, one of our venture capital investors and a VC investment firm in blockchain technology and decentralized ledger technology in general. We have the honor of being joined by two of Blockcelerate's members alongside our CEO, Kieran James Lubin. I'll start by introducing Kate and Sam. Kate Misselmacher is the general partner and CEO of Blockcelerate. She has a ton of enterprise blockchain experience, and prior to founding Blockcelerate, worked with Gartner for over 10 years. A lot of her work there was with Fortune 500 companies, including working with CIOs on their digital innovation projects. So you can see how naturally this was an extension of her work there. Sam Yilmaz joins her also as someone that is very passionate about decentralized ledger technology. Prior to working at Blockcelerate, he founded the Decentralized Application Fund, which was one of the first venture funds to raise all of its investment capital in cryptocurrency and invest only in decentralized applications. Between the two of them, they have deep enterprise experience and a large network to boot, as well as renowned public speaking, including at the World Economic Forum in Davos and Forbes as well. Also recently, again in Forbes, actually, Kate was interviewed and talked about BlockApps itself. And then a little bit more about Kieran James Lubin on the BlockApps side, our co-founder and CEO. He architected and implemented BlockApps' RESTful API and the surrounding products and components that now form our flagship product, STRATO. Between the three of them, they have about 15 or more years of deep enterprise blockchain experience. And I'm excited to share what they have put together for us today with you all. While we wait for some more people to come in, I know that you have probably seen the topics that we plan to discuss today, but I wanted to keep it fun, interactive, and start with a poll. So I've just launched a poll asking you, the people out there that work with private equity companies, that have a private equity portfolio, or that plan to, which trends are your portfolio companies going to be influenced by the most? And so I see some results coming in now, which is great. If you want to vote, you should look for the poll option. Oh, wow. Looks like we actually have a lot of attendees coming in already, and we will ask this question again later. So in the interest of time and respecting everyone's, I'm going to end it and share what we have so far. It looks like we've got, can you guys all see that over there? Just want to make sure. Okay, great. Looks like we've got a sort of even mix, but the most emphasis on increasing automation and enhancing supply chain resilience. That's good. We'll be starting with increasing automation, but I'm excited to see what you guys think of all of these topics. So without further ado, I'm going to turn it over to Sam, who will introduce what we're going to talk about today. Hi, Sam.
Great, thanks for the introduction, Caleb, and I appreciate everybody showing up, and great to be here. So in today's call, we are looking to share with you a macro overview of how the pandemic has impacted blockchain adoption in general. Then we want to dig in just a tad deeper in the framework of the three trends we have identified to be a helpful language that we borrow from written reports and research publications from leading consulting firms like McKinsey. And these are trends that have been around, but with COVID-19 will in fact be accelerated further and stay even after the pandemic subsides. So fundamentally, we see there are now stronger tailwinds behind efforts to further automate workflows and render transactions contactless, and enhancing the resilience of supply chains. So in that light, we wanted to pair these trends to the challenges and opportunities that larger PE-held companies will face, and how blockchain will be positioned to help them along.
Great. And before we dive into these trends, we wanted to first share a macroeconomic perspective with you. It's not a surprise for anyone that we're living in the time of unprecedented time of global dislocation, technological, financial, and social. And we have some good, bad, and ugly news for you. Let's start with the ugly. Unemployment is at 10 to 11%, which is a significant improvement over the last couple of months, but is still serving as a foundation for social unrest. Global GDP took a massive hit. Global growth is projected to end up anywhere between 0 to 5% this year, which is a faster contraction than during the 2008 global financial crisis. And US GDP is down 34% in the last quarter alone compared to last year. The bad news is that US has responded to the crisis by printing money. In fact, the United States printed more money in June than in the first 2 centuries after its founding. Last month, the US budget deficit was $864 billion, larger than the total debt incurred from 1776 through the end of 1979. Lastly, the good news is that remote work is accelerating digital transformation, which is benefiting technology adoption, which in turn is accelerating a set of blockchain use cases around automation, reduction in contact, and resilient supply chains that we'll talk throughout the presentation today. But before we do that, what you're seeing in front of you is the result of the latest McKinsey study, which identified the top 3 trends driving the business markets today. And as anticipated and as mentioned earlier, the remote work is accelerating digital transformation, including the adoption of new technologies that are both driving cost cutting as well as new revenue opportunities through new digital channels. You might be wondering how these macro trends are impacting the specific blockchain use cases and implementations. And what you're seeing in front of you is the result of the latest Gartner study of top blockchain use cases, which were published before COVID-19 crisis in March of this year. In the top 5, we have payment and settlement, which is the leader in terms of the total number of projects. Provenance and asset tracking, which is leading in terms of the total number of cases live in production, followed by identity management, KYC, and trade finance. We're anticipating that some of them will be winners and some of them will be losers because of COVID-19 crisis. So before we reveal our thoughts, we wanted to do another quick poll to the audience to gauge what your thoughts are. So if you want to vote, which use case do you think accelerated the most during COVID-19 crisis?
Great. Before we share the results from the world, we wanted to hear from you. We understand that this might be a self-selected blockchain sophisticated group. So your results might be a bit more telling of how the market will evolve.
Yep, and we've got a pretty solid number of votes here too. I'm happy everyone is embracing the interactive nature here. With more than 2/3 of people having voted, I'll share the results and we can continue on.
All right, looks like asset tracking use case is leading the way, which is quite in line, I think, with what we had anticipated on our end. Based on the interactions with companies we are having as a venture fund and BlockApps is having with their customers, We believe that the winners will be the top 5, as well as claims and internal record keeping use cases, while the losers might be use cases impacted the most by the COVID-19 crisis, such as travel, leisure, and hospitality, as in the case of loyalty point and rewards, or smart cities, smart city implementations, especially in the US with the budget cuts. Another example or perspective that shows pre-COVID-19 blockchain adoption is through the lens of different industries. And what you see here is that the adoption was led by financial services, services industries, and transportation industries. What you might be anticipating within your portfolio is that services, transportation, and retail might be lagging or decelerated because of COVID-19, while healthcare, telecom, and financial services might be accelerated. With that, I'm going to pass it on to Kieran to talk about specific trends.
Always helpful to hear directly from someone who's providing the solutions to real customers.
Thank you, Kate. Thank you, Sam. Thank you, everyone, for attending. To reiterate the point, we see these macro trends that Kate and Sam have identified in the wider market also reflected in our customer base. Increasing automation, there's a very strong driver towards automation in the sense that incomes have been reduced, revenues are down, personal incomes are down, and so everyone, but businesses especially, are looking at cost-cutting measures to remain afloat. Typically, the main method to do so, the largest cost for these businesses tends to be labor, and so they are focusing on ways to more efficiently use labor and automate their operations to a greater degree. Blockchain technology is particularly relevant when working across different internal departments that have different IT systems that are not necessarily integrated or well synchronized, and across businesses. So when businesses are working with each other, there is often heavy reconciliation effort due to the fact that their systems are internally different. They each have their own ERPs and other supporting systems, and that creates data inconsistencies which drive manual reconciliation and costs. Similarly, we're seeing reducing contact as a major driver for new initiatives. So fully digital interactions are basically required in the pandemic environment. We've all been at a restaurant, and instead of looking at a menu, now scan a QR code. We'll talk about examples like airports. So how can this technology improve and streamline our ability to interact digitally? Really, the answer is that the key systems that we depend on do not, to date, integrate all that well with each other, which creates sort of a fractured identity and makes it difficult for users to, consumers to interact with goods, services, etc. Finally, we'll have some discussion of supply chain resilience, where this is a very popular use case, supply chains generally. We'll talk more specifics later within our customer base, and really around adjusting the supply chains to changing demand currents. We all know the PPE shortages that we've seen. We've been working with one hospital that actually went to the lengths of chartering a plane from China to bring in the PPE that they needed. And also a changing regulatory climate, a changing geopolitical climate that affects the operations of these supply chains in unexpected ways. And what we need is a technology that allows for greater collaboration and greater trust and accuracy in the reporting around where everything is, what supply is available, and what it is.
Right, so now we're going to jump into the first trend, increasing automation. And as Kieran just described, what this refers to is not only the approach of more effectively using labor, but also removing manual tasks and automation of as many business processes as possible. So now let's look at 3 specific blockchain use cases within this emerging automation trend. And they are claims processing, payments, and record-keeping automation. In terms of the claim processing example, in one instance, an unnamed airline experienced a surge in cancellations due to pandemic shutdown. Pre-pandemic, they would typically see on average 500 requests per day. In the early days of COVID-19, the number soared to 4,000 requests per day. And in this instance, smart contract-based claim processing system would have saved the company a lot of time and money, while also disintermediating some players such as Claim Center, while also making the customer experience better for everyone. Another example is around unemployment claims. For example, we know that overall claims increased by more than 520% over the past year. And in the state of New York alone, over 80,000 initial unemployment insurance claims were filed in 1 week. Another example on the payment automation is with a large bank. In this particular example, the bank was faced with the need to update 6 million loan records immediately. This particular project was estimated to take 2 years and 100 people to complete. Blockchain-based system automates payment processing and repayment of loans, so we can anticipate this programmatic smart contract-based payment system will take or will make the payment processing challenge more manageable for both banks and customers. And last example, which we'll dive into more details shortly, is record-keeping automation, which allows multiple parties to have a single version of truth on the record. And one example we'll dive into shortly is around clinical trials, where clients are looking to automate the process of drug discovery and testing. It normally takes several weeks to collect people's information, determine who may be suitable for the trial, and get the paperwork in order. So I'll let Sam and Kieran cover some of the key challenges, as well as how blockchain is making an impact here.
Yeah, thank you, Kate. So it might be helpful before Kieran looks to expand upon the variety of record-keeping projects that they're working on. It might be helpful for me to look at and give some kind of a framework on the patterns to look out for. So our hypothesis is that what we call record-keeping challenges actually breaks down to 3 different challenges, all of which are effectively measures to automate how an enterprise player and sub-players within it look to access data and play with it. So the resolution to these 3 challenges will render record-keeping effectively a smooth operation, right? So whether it's healthcare records, clinical trials, scientific data sharing, IoT devices, or document management, all of these use cases require that users are authenticated and authorized in secure ways, that their authorizations to edit or share are well managed, auditable, and is checked upon with every action. Then the verification challenge is that once the data is retrieved, that we wish to verify that in fact it's the same as the one that was uploaded or shared in the first place. And the third point is cross-usability, in that data that may be stored for use by one application is not easily used in a different application sometimes. So there are still data access management problems that web applications alone have a hard time solving easily amidst the trend of digitization that's been with us for a while. So private keys can be embedded into devices or be given to users or their wallets, and their authentication can be easily managed. Who has access to edit what data can be governed and audited on a distributed ledger. Then once the documents are retrieved, hashing algorithms can cross-compare the hashes to verify authenticity of documentation, and then data can be standardized for cross-usability across applications as it is stored on a distributed ledger technology and blockchain. So these 3 facets are better addressed by carrying the data management and data management of data access onto the blockchain.
In a few concrete examples, well, as Sam and Kate mentioned, we'll first talk about clinical trials. We work with Alton. It's a large French engineering company, and they've developed a clinical trials platform built on top of our platform, BlockApps STRATO. It's called Life Science Ledger. Life Science Ledger automates the end-to-end clinical trial process, starting with recruitment. So this is the process of finding participants in the trial, all the way through the data collection, the administration of the trial, and then the communication of the endpoints of the trial. That's the data in finalized form collected to the relevant parties. A clinical trial typically has a few entities involved. There's typically a sponsor. So this is think of it as a large pharmaceutical firm, or perhaps a biotech company creating a new medical device. The trials are often outsourced, and they'd be outsourced to a contract research organization, or CRO. And then there's always a regulatory touch point. So there are filings to the FDA, for instance, that need to be produced, and the data really needs to be prepared properly for that. Clinical trials they're done for high impact cases. You know, if you're going to the effort of the clinical trial, you're looking at something with quite a large market size, and the time to market really matters. And so anything you can do to speed up a clinical trial has a really large top line impact for one of these large companies. What the Life Science Ledger platform does is automate a lot of the manual record keeping, data collection aspects, and more importantly, the data back and forth. So there are many different versions of the data endpoints of the trial, and those are eventually communicated again to the relevant regulatory authorities. And that there are so many versions and so much manual effort adds quite a bit of time to the trial. The trust in the data also is lower due to this manual effort. And so the FDA often feels the need to fact check everything you've done. Given the Life Science Ledger system, a lot of that manual effort goes away, and the data can be trusted to a greater degree because it's secured with our blockchain technology and is proactively communicated to the regulator in a way that it hasn't been prior. Another key example in record keeping is construction project management. So we work with some large EPC, engineering, procurement, and construction firms, and they are focused on really large capital projects. So think you're building an offshore rig or something of that nature, a 9-figure project, perhaps a 10-figure project. Typically, these are involving hundreds to thousands of vendors, up to 800,000, we've heard, documents associated with a single project, negotiated. So master agreements, individual project-based agreements, purchase orders. It's a very large problem, and each company, while there are technologies like DocuSign for the execution of these contracts, there's an ongoing performance question. And each company has their own way of internally tracking these documents, interfacing with an ERP and other internal systems. So there's a lot of data to reconcile, and this leads to cost, high manual effort in managing all of these documents, and sometimes poor project performance. Certain dates can slip because this is such a big problem. So these are two great examples of the blockchain value in automation and record keeping that we're working on with our customers today. Each leverage.
Thanks, Kieran.
Thank you.
We covered a bunch of stuff there, going over the trend of automation in general, and then doing a deep dive on record keeping itself. I wanted to give the audience a chance to ask any questions they might have. And just taking a look through now, it seems like we've got some people typing some things, so I'll just give them a second to finish that. While you were talking about that, Kieran, I was thinking, you know, there are all sorts of records that are painful to manage for you in your life as a CEO of a startup. What's one that's like the worst for you?
Well, yes. So it's the same for us. I would say finalizing those legal agreements, and on a contractual basis, and then perhaps most painful is right after that, invoicing. So getting the purchase order issued by the customer, Perhaps, often we invoice and then they haven't yet created the purchase order linked to that invoice. And so we need the number, so we have to reissue the invoice. Tracking all of these are PDF documents typically communicated over email in some batch-based manner, typically coming from the customer's ERP system. If there were just one record where once the contractual execution had occurred and the invoicing flow followed smoothly, the purchase order was created immediately, it would make my life a fair bit easier. So that's a classic one. I'm sure many folks have experienced that as well.
Totally. I share that with you. We actually do have one question that came in, and it's from a guy named Mark. And he asked, what do you see as other key innovative technologies that will be used alongside blockchain for this record automation?
I'll field that, but Kate, Sam, feel free to add to my answer. One that's really popular, and we'll probably talk a little bit more in the supply chain section, is IoT generally, and IoT can be a broad term, but blockchains are securing, synchronizing all of the sort of data within the world, but they are not necessarily ensuring that the data that's coming into the system is perfect, right? No system can do that. And so to the extent that we can trust in well-constructed devices with blockchain-based identities, we can do a better job of knowing, the physical location of goods when people move in and out certain places, and so all of these technologies that are IoT related, bridging the physical to digital, are a key companion to blockchain technology.
Yeah, I would also add that in general, we're seeing convergence of many technologies as a part of this broader digital transformation trend. And they're all enabling each other, such as IoT, but another one is artificial intelligence and AI that's being applied to the data that is being extracted or added to the system to derive specific insights as a part of the value chain process. Cloud, obviously, in convergence to cloud is playing a key role here. Security is always going to be embedded into this new distributed ledger system to make sure that the data is secured and private. So I would say all of the key buzzwords, if you will, are now converging as a part of this larger trend.
Thanks, guys, for answering that question. We're actually doing really well staying on track and on time. And I see maybe some other people typing, but it's probably in our best interest to move to the second of the 3 topics we wanted to cover today. If you're writing something, please feel free to keep going, and I will bring it up at another break as it comes up. So Kate, if you want to bring us to our next topic.
Yeah. So moving on to the second trend, you should be observing within your portfolio is around reducing contact. And what this trend refers to is the reduction of face-to-face interactions, which gives rise to an increased demand of the contactless means of data, money, and value exchange. So let's take a look at some specific blockchain examples within this trend. There are 3 that stand out: contactless payments, number 1, internal record keeping, number 2, and contactless identity management and KYCs as the 3rd one. We all know that we're moving to a cashless society, and the move has been accelerated by COVID. And this results into more contactless payment options, growth of mobile wallets, and now the increased proliferation of stable coins, as well as some decentralized finance applications. Contactless internal record keeping not only means going digital and paperless, but also allowing for multiple stakeholders who are not in the same room to trust each other in a contactless way, seeing the single version of truth. And this could be in the context of audits or data provenance. And last but not least is the contactless identity management and KYC at places like banks, airports, points of sales. And this is the 3rd use case that we'll dive into more details shortly.
Great, let me take it away. To further speak to the identity management, maybe in the context of some relatable examples, we could think of managing the identity of a basket of goods in the supply chain, or we could be speaking about your identity as you're traveling. So the problem of contact arising out of difficulties with identity management is that we rely heavily on in-person authentication of your digital identity or information. So a digital passport seems easy to fake and not trustworthy, and a traveler showing up is seen as an extra validation point. Not only is a given authentication difficult, but also there are multiple checkpoints that need to authenticate. So that creates this experience of disjointed verification systems where you have to first authenticate you have a ticket at the check-in, then your passport, then you are in fact who you say you are at the other security checkpoint, then again before you get on the plane. And these systems don't always necessarily talk to each other very easily. So like a product is, as it's traveling through multiple parties through the supply chain, you are the common denominator at these various points of contact in the context of your airport experience. So every checkpoint has to re-authenticate identity, re-verify, and make sure that the rules are being complied with. So if we were to empower these data systems effectively to travel with the traveler without a person having to make multiple points of contact, multiple points of authentication, then we could create a more seamless experience for the user, allow for easier confirmation of compliance, and also address the pain points of cybersecurity that arises from these multiple systems having to communicate and sometimes not so secure channels.
So to talk through a concrete example, BlockApps has spent quite a bit of time in the travel industry generally, most notably building a system along with United Airlines to allow for direct corporate booking of travel. So direct being you can go to the united.com website and purchase directly from them versus an aggregator like an Expedia. And there are certain benefits to doing so, including experience and also special offers that United will only target through the direct channel. So in this process, we learned quite a bit about the traveler journey, again, beginning with booking, as I mentioned, to the actual airport activity. And you find that there are quite a lot of technological supporting systems that, to Sam's point, exist to authenticate who you are from a digital identity perspective. So this is showing your passport at the airport. There are different systems for baggage tracking provided by companies like SETA, the booking experience through the passenger management for the airline. That's provided by companies like Sabre and Travelport, the global distribution systems, contributing to a disparate sense of identity that is not well integrated and thus requires more in-person physical contact to know who you are and what you're allowed to do. The world we imagine, and coming sooner than we think, will allow us to get rid of physical forms of identity beyond perhaps a cell phone, to in fact detect your presence and know who you are. So imagine just showing up at an airport at a particular time and you being told, hey, you need to be at this location at this particular time, and everything is checked in, leave your bags here, and just come to the terminal. The reason we have all these physical touch points is due to the incomplete data picture around who you are. If you think about the way the known traveler number works and other things like Clear, which we can talk more about, what you're doing a trade between giving more information about you in exchange for greater convenience. We think that that trade can be made kind of more generally and less with particular one-off systems, but as a total view for user-centric identity in a secure manner mediated by blockchain technology. So with that said, we see a really bright future for blockchain as the kind of underlying infrastructure for a contactless future.
Thank you, Kieran. That was nice to hear about a potential future world where it's a little easier to do that travel and to do it again. We did get a question squeak in from the last section. Maybe we can start with that one and let some other people type as well. It's from Brian, and Brian asks, what is the use case around deployment and operational resilience, i.e. enabling a workforce to manage a digital transformation? I think the question is basically asking how blockchain can help with the meta management of those other topics we were talking about at the end of the Q&A session.
So how could we use blockchain to manage the change as we do digital transformation?
A specific point on deployment and operational resilience in that scenario.
I wonder if there's a second question that comes along with that question, so I could maybe get more of the context. One way that I could answer is to demonstrate, hey, here are the changes that we intend to make, and here are the metrics, and here are the processes that will be updated and changed. Here are the data feeds that we're able to get from those processes, and here are all the parties that can see those outputs in our organization. And as we look to take our organization as a whole from A to B, then the data that we can capture from the processes will also evolve over time. So we could manage who needs to do what and who can see what data from which processes, and track how each process is evolving in terms of its metrics throughout that change management process.
I see Brian has posted a follow-up comment. Organizations change, but often fail to deliver, e.g. compliance and audit, etc. So I think there is actually an interesting case for creating a secure blockchain-based standard on what all processes need to do, and where to a certain degree you see this with ERP technologies now, but especially as those processes, compliance processes, require external input, be it from audit firms or regulatory bodies, et cetera. And so I do think there is an opportunity to codify a certain sort of set of rules related to all the in-scope regulations, and in the change management process, when you're deploying new business processes or changing, having those rules sort of pre-codified as smart contracts, and kind of being able to a certain degree, proactively share and proactively comply by the enforcement of those smart contracts. So I think it's a great use case, actually, and one that may be underexplored today.
Thank you, guys. Thank you both, Brian.
Definitely worth thinking more about. Thanks, Brian.
Yeah, if we answered your question, please let us know. Otherwise, feel free to follow up some more. We also got one more question on the contactlessness topic from John Carpenter. John's a friend of BlockApps. Hey, hope you're doing well, John. And his question is explaining a solution that he has, and I think he's basically looking for evaluation of how easy it would be to integrate into this. So I'll just read it and then get the summary after that. He says, we have an innovative touchless payment platform that's targeted toward reducing contact in a restaurant setting. It's integrated with a normal credit card processing, and would be interested to see if they could integrate cryptocurrency acceptance into the platform as well. So I think they're asking, if I'm understanding correctly, on the topic of contactless payment, would a system that's contactless for credit card payment be able to do the same thing for something like a digital currency, cryptocurrency, along those lines? And how easy would it be to integrate that into one system?
I would, if it's a matter of enabling your organization to accept cryptocurrency as payments, there are existing out-of-the-box solutions we can integrate with. Happy to follow up with some names after the call. But if it's a matter of bringing those into your accounting system that's more sophisticated in what kinds of line items you wish to budget and who inside the organization you wish to give control to spend. That kind of macro management of budgets and the whole accounting system is perhaps more complex, and you might need other solutions for that. Kieran, if you want to answer in the context of BlockApps as to whether or not this is a focus area for you, feel free to
So I would
chime
add one popular use case. So it's interesting to see payments as the most popular blockchain use case and growing, but things like loyalty, and loyalty is pretty close to payments, in decline. Now I'm thinking there may be sort of a great market opportunity now for customer retention. So if you're a small business, you're a restaurant, or that sort of thing, you really need at this time to retain the customers that you do have. It's not a growth environment, and so we've seen a need for essentially special purpose currencies. So a currency that represents some exchangeable, but just the right to purchase something at a particular restaurant, just like a normal loyalty point. The airlines have been doing digital currencies since whatever, the 70s or 80s. There might really be an opportunity for something kind of purpose built. So I think accepting cryptocurrencies, to Sam's point, is not a technical challenge, though it may be an accounting compliance challenge, especially to the variability of the floating prices, et cetera. But there might be an interesting opportunity around more focused loyalty type or purpose-built currencies mediated by blockchain as well.
Right. And I would add to that is that I see acceptance of the cryptocurrency as a stepping stone that's probably applicable in the short term. In the long term, we're seeing disintermediation of credit card processing companies altogether. If you know that they're charging quite a bit of margin from the merchants, why would they give up that revenue opportunity to credit card processing companies if they can interact directly with their customers through the use of, say, stable coins? So in the future, in the long-term future, 5 to 10 years from now, we're seeing disintermediation of the credit card processing companies altogether.
We
Thank
move
you
on to the
guys
next section.
for the three angles on that. You make a marketer very happy with a clip like that. And thanks, John, for the question. Yeah, to keep us on time, we're going to move on to the third section of the three, enhancing supply chain resilience. Kate, if you would like to introduce it.
Sure. So this third trend you might be observing within your portfolio, especially if you do have manufacturing or CPG companies or retail companies, is around resilient supply chains. And this trend refers to the company's ability to anticipate and withstand supply chain disruptions and adjust to the rapidly changing landscape. Its ability to coordinate at scale, I think from what you've heard so far in this presentation, is the best blockchain use cases tend to be ones where you have multiplicity of stakeholders trying to get a hold of the same version of truth on a common denominator, which tends to be either a product or a data set, or even yourself as your own identity. So supply chain resilience tends to be one of the most prominently well-known use cases of blockchain. So now let's take a look at the three specific examples here. And we have provenance and asset tracking as one, trade finance and demand management. Provenance and asset tracking is, out of the three, probably the most well-known use case of blockchain, and it's especially rising in popularity today. And provenance refers to the recording of movement of assets to show full history of ownership rather than location, while asset tracking refers to the attributes such as location tracking of a particular asset. Blockchain plays a critical role in this process by ensuring that multiple stakeholders know exactly where this product is at all times. And we'll dive into this use case in more detail shortly. Trade finance is the second excellent use case of blockchain as a part of resiliency. because resiliency not only applies to physical provenance of goods, but also coordination of payments, invoices, letters of credit, and more. And blockchain-based infrastructure opens up new ways and new opportunities of automatic settlement, transparent invoicing, new models of credit, and funding guarantees backing the trade. And the third use case is demand management. And because blockchain allows for this unified real-time collection of data among multiple stakeholders, it provides a valuable and trusted data source for demand planners who can use it to better forecast and have a better insight into consumer behavior. So now Sam and Kieran will talk us through the challenges in the provenance and asset tracking use case and how blockchain is making an impact there.
Great. Yeah, so each of these points that Kate raised deserve their own expansion and elaboration, but specifically focusing on the provenance and asset tracking because, again, it's a great use case for blockchain, many stakeholders, relatively standardized process. We recognize that there are four main challenges. These challenges in supply chain tracking and provenance have become more apparent to all of us during COVID, but these challenges were really always there. And we had come to accept them as problems that simply require additional verification, reconciliation, later corrections. So solving them just meant that we would have more human minds look at them, solve them, and then we would trust people and just add more talents to the mix. So when the crisis basically extended our experience of these problems, we've seen suppliers take orders on product they didn't have, lose product along the way due to theft and inability to track that. Fake products hit the market, outdated or spoiled goods like moldy masks were shipped out. And when demand hit fast, cross-jurisdiction transactions were limited when they were needed the most. So these challenges pose limits to how fast we can meet market demands and simply because of avoidable costs of coordination. And whenever there is cost of coordination preventing transactions from happening, consensus over the wire that blockchain offers is a great help to get reliable data in an auditable way to reduce those kinetic barriers, those costs associated with getting the job done. So with that, I want to leave the floor to Kieran to talk about how these four challenges are addressed in the context of particular clients.
Thank you, Sam. Yeah, a few key customer examples here. So one of our earliest production projects is with BHP Billiton, often the world's largest mining company by market cap. They have an offshore exploration business. So they are building those rigs I sort of mentioned before and drilling into the earth at different depths to collect typically precious minerals. They're collected in large metal tubes and then sent to a variety of third-party vendors to do analyses on these samples. It could be anywhere between 10 and 100,000 active at a given time. And the goal of the analyses is to assess the viability of the drill effort that they're going, and they often imply that more analysis is needed. And so the samples get shipped from vendor to vendor. And BHP did really have the problem of tracking all of this activity. So these core samples, they're very expensive to collect. You know, it could be up to the 7-figure range, maybe 8 even. And they, at the edge of the BHP network, there can be inventory loss basically from vendor to vendor. So it's not going to be from BHP to vendor. That worked very well. That communication channel is well established. But due to the fact that all of the tracking systems, basically the internal ERP at BHP versus vendor A versus vendor B, are not synchronized, you can get into sort of a he said, she said game where BHP ships something to vendor A, it implies a certain analysis, BHP asks vendor A to ship it to vendor B then ships it on to vendor C later, and then somewhere in that chain, there's an information loss and the vendors all point fingers at each other and leaving BHP out as one of these very valuable core samples. And so what we achieve with them is a synchronization of the data across all of the internal tracking systems, lifting the system from Excel in part as a data integration method to a fully automated method, and the corresponding reduction of inventory loss. Partially inspired by this example, we work with Bayer Crop Science, and they've been in production for a number of years on similar tracking use cases in their value chain. So they typically are 40 to 50% market share in seed and agrochemical products. And so very important actor in that value chain. And they have a great need for what I'd call identity preservation. So, and you know, aligned to authenticity. They've got many different types of products, some that fall more in the commodity bucket, where their innovation is around creating greater yield for the grower to improve their margins. But also there are specialty products. For instance, white corn is a product that is not commodity corn. It's distinguished for its ability to make really good tortilla chips. And so some of the processing firms request white corn specifically, and they would really like to know that they're getting white corn and not commodity corn, because that will affect the quality of the end product. And so there we've got the classic kind of authenticity use case and a little bit of the product safety use case as well that you kind of see both in this example and in the wider market. How do you know what you're getting? How do you know how long it's been there? What did it look like actually through the whole grow cycle? And when it gets shipped to me, how do I know that it's fresh, safe, etc.? So here we're seeing our track and trace capability kind of widely deployed, and this affects a lot of the ERP companies, so the Oracles, the SAPs, Infor, etc. But this is also an instance of the kind of pretty classic EDI use case. So we're often asked, so this is a great capability. We really like the blockchain vision. If it's providing so much value, you know, why isn't it everywhere already? And like we've seen in the EDI technology space, it's a network technology and it takes time to adopt. And often you need to work with a big player like a BHP, like a Bayer, like a Walmart to get a larger chunk of the value chain onto the same system and get it to the point where it has its own momentum. One of the big benefits over EDI type technology is that that technology is quite rigid in the sense that you know, basically you do a lot of work to define a certain set of messages, file formats, etc., and that defines, you know, what a shipment should look like, what fields should be in describing a seed product, what a purchase order should look like. And once those standards are set in place, they're often set by committee, so it takes quite a long time. We've actually been involved in some committees like that, and so have the very direct experience. And once they're set, they become very rigid because everyone builds their internal systems to support the standard as best they can. You know, the fields in the ERP system need to be conformed somehow to the messages, but everyone does it a little bit differently. And so if you wanted to change a business process to allow different data elements, a new step, you've got to meet as a committee again, and it's very challenging to get everyone to do that and get everyone also to do another IT implementation cycle. So what you see is the pace of change in B2B transactional commerce is much slower than it could be due to technological limitations which blockchain solve. The big difference for blockchain being a standardization into the core data layer, this is the analog of the ERP or interfacing directly with the ERP, versus just at the messaging layer. That allows you to update the business process and propagate that out without all of this committee work, standard setting. You sort of get standards by default, agreed business process by default, just by pushing new and improved code to the system. So with that said, I think we can move on to any questions.
Yeah, thank you, Kieran. Looks like we've got about 5 minutes left before the hour turns around. I wanted to take this moment to say thanks. And before you move on to your next meeting, I wanted to bring us kind of full circle and open up another poll, re-asking the same question we asked at the beginning. Now that you've gotten to hear from us we were curious, which trends do you think the viewer, portfolio company will be influenced by the most? And we don't have any specific questions for the supply chain management finished yet. So I might just open it up to any questions in general, and we can maybe do our closing remarks, and I will share the results of the poll after that.
We can talk real quick about a question that came up before the webinar from one of our private equity colleagues around the comparison of blockchain technology and technology like EDI, electronic data exchange, or is that what it stands for, in the context of supply chains. So maybe Kieran, you can talk a little bit about the proliferation of EDI versus blockchain.
Yeah, thanks, Kate. So as I mentioned a little bit in the last section, we do see a similar adoption pattern where quite often a software vendor is teaming up with a big actor in a value chain. So even in the very early days with value-added networks that, let's say, IBM used to manage, probably still does, going on, to the present day, often there are major actors with a lot of value, a lot of power in a value chain, and they are the ones who want really great degree of automation. They have maybe the highest costs in managing partners and vendors, and are able to institute industry-wide change. So we are seeing that as that big trend as well, where you need a technology vendor to team up with some of the big players in an industry to get industry-wide change in place. The big difference, though, with the EDI adoptions, the EDI technology is, a little bit antiquated at this point. It all still works, but it's quite a challenge. It always has to integrate with ERPs and systems like that, and it's not always the easiest integration to do. And to the point earlier, evolving those systems over time is really quite challenging. Once you've agreed to the set of messages that are communicated, and these could be, X12 messages in certain cases, or even things like Swift messages. Swift is a fairly classic EDI provider in a sense. You get very locked into that, and so again, the pace of change that you get once these systems are set up is slow, and so we see a fair degree of stagnation in business process innovation due to the relatively rigid nature of the EDI technology that we are not seeing with blockchain technology. In fact, blockchain systems are much more evolvable due to the combination of the security, but also the ability to live upgrade the system in a manner that everyone trusts and can reuse the work of other enterprises. We're really seeing much faster movement in terms of adding follow-on functionality to the same network. And thus, we believe that this platform approach will help blockchains be the next generation of EDI and overtake the sort of ERP plus EDI stack that you see out there today. I see we have a question from Gautam. Should I field this one? I think we've got about 2 minutes left. So let me summarize for the group. The question is basically around the airline industry and its resistance to new technology, and whether we're seeing a trend in an uptick in interest from that industry due to market conditions, et cetera. And so, Gautam, to your point, you mentioned a lot of great elements in the answer. The airlines' revenue is way down, right? And the airlines have not necessarily operated from a margin per booking perspective. They have really tried to drive revenue up as high as possible and spent all their marketing effort there, and not thought as much about how to really make the per booking margin as high as possible. In fact, on a $200 airline ticket, quite often you're seeing 50, 60 bucks go to credit card company, the GDS, and perhaps the online travel agency, or commissions to the brick and mortar travel agency. And so just given the contracting environment from a top line revenue perspective, they are particularly focused now on any new innovation that can improve their margin profile. And that is causing a lot of interest in blockchain technology within the airlines. So I think I agree with you. This is the moment. I think we'll see, at least we're seeing major layoffs. We might see the failure of a major airline in the next, 3 to 6, maybe 12 months. And what you'll see then is that, they won't go away entirely. They'll be bought by private equity, chopped up, et cetera, and they'll be much more efficient. So they'll just need to architect for a digital first world, in that really the experience they have with the traveler is through a mobile app or their direct website, not so much the on-plane experience. That part is necessary, but they need to become really digital forward versus digital laggard companies. So I think it's a great question, and I agree with your kind of general sentiment. And yes, we're seeing driving uptick in interest from them for sure.
Thank you, Kieran. We're at the top of the hour here, so I closed the little poll that we had. And good news is it seems like a lot more people responded. So at least we moved some people's opinions around. Looks like automation was a winner with the most votes for influencing a private equity portfolio. But I think it's important that we note every company is different. And if you want some sort of specific information on how your portfolio or a specific portfolio company can be helped with blockchain technology, we are here for you. And so with that, I leave it to you guys for closing remarks, and thank everyone for joining today.
Thanks everyone for joining. Caleb, I'm not sure, maybe at least I don't see the poll results popped up. So maybe if you can, there we go.
There we go. My apologies.
Yeah, 54% on increasing automation, 31% supply chain resilience, 15% on reducing contact. So really appreciate you all joining today. And I think we'll be sending this out for posterity and for those who registered and couldn't make it. So much appreciated. Any final words, Kate, Sam?
Yeah, thank you guys for helping us think through the market conditions and see the needs and how things are evolving over the course of the last 3 years even. And the increasing demand on the enterprise client side, and the kinds of challenges that they used to have and how they now know how to solve them and come to you with different challenges. So it's exciting to see that sophistication.
If there's one takeaway that you can take with you after this webinar, is that we're seeing COVID-19 and pandemic as an inflection point for blockchain adoption. So you have a choice either to ignore it or to pay attention to it. So we would encourage you to do the latter. Feel free to get in touch with us if you'd like, and we're happy to help.
Bye for now, folks.
Thank you.
Thank you,
Bye.
Caleb, for hosting.